The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, where there's no bull side or bear side, just the right side. And as we start off today, the right side is slightly higher, up 10 points on the S&P cash at 2109 and change on the cash. Volume is pathetic, and I'm not saying just kind of light or anything. It's pathetic. 2.11 billion shares on the New York Consolidated Tape. A great deal of that was hurry up and wait for the wonderful Janet Yellen to speak at 12:30. She spoke almost an hour, answered a few ridiculous questions, and I don't know what else you can say about it other than that. There was one little dip in what she said, but that kind of went away after a little bit, and it was mostly just the whole thing of maybe taking out the month of the raise, but not that there will be a raise. Everybody's kind of thinking that she is the proverbial boy who cried wolf. I guess it would be the girl who cried wolf. But we will go back to the original historical document. It was a boy. So what do we have out here? We've got incredibly light volume. We had the dollar move back during her speech down to what is fairly decent resistance to the downside in the dollar index. That's $93.75 was the low today. It's up about 20 cents off that and down about 8 cents on the day. It was much higher, though, 94.27. Again, we're kind of in this light and variable trading. Certainly, it has to be light because of the volume, but it is incredibly light. And one of the things that they've said since immemorial in markets has been, do not be short a quiet market. I had some positions, if you listen to the show on Friday, that I've vamoosed on, and I'm happy that I did on Friday. Medium long term, I am rather bullish, excuse me. I thought maybe we were going to have a bit of a pull back and got out. As I always say, I may not always be right, but I will not stick into a position that I know I'm wrong on. And that's kind of it. There is no bull side. There is no bear side. There is only the right side. And right now, the right side probably short term is waiting for a big signal in something. I do not change or chase dimes in front of a steamroller. And right now, the light volume is a steamroller. And you don't want to be the wacky cartoon bunny out in front of that steamroller. Or is it the, what is it, the Wile E. Coyote? That's it. He's the one that's always in front of that. You don't want to be Wile E. Coyote. Just don't be him. That's the way they say. As course, as always, we like to join in at this time.
The following takes place between 2 p.m. and 3 p.m.
Question. No, I'm not. I am not out. My medium long-term positions. I have a medium-term and a long-term position in the Tech Insider, which I am long, and I am holding those positions. Just the short-term out here could, with the light volume, could see a lot of movement. And you don't want to be short, but at the same time, I can't see trying to earn hourly wages in these thin and fairly non-trending markets. We could go up for a little while, but I'm not going to sweat over 5-point and 10-point moves in the S&P and declare myself a big winner. I will have winners and I will have losers. My point is to have very small losers and to have some very large winners, but not to pitch a perfect game, but to actually be the big home run hitter in October and make the big bucks in the World Series. Anyway, I've mixed enough metaphors out here today. We are headed for a little history.
That it's all just a little bit of history repeating.
On this day in 1934, the Securities Exchange Act it comes into being, which creates the U.S. Securities and Exchange Commission. Mostly toothless, requires companies to file registration documents with the stock exchanges and to file quarterly financial statements with the SEC, signed into law by Franklin Delano Roosevelt. For the first time, the financial disclosure is made a fundamental right for investors, and regulation and enforcement of financial rules becomes a federal responsibility. Before then, you could do anything you want. And the head of the reason that these regulations actually came into being was that the head of the markets at the time, the president of the New York Stock Exchange, actually borrowed money from his own company to short his own company in 1929. And he was later thrown out and got, if I remember right, actually got caught embezzling from the New York Stock Exchange. Never did a day in jail either. They just tossed him out. But I think that was like 1937. Anyway, a lot of dirty laundry. On Friday, we're going to talk about the documents that the companies have to file. And we have an expert coming in at the bottom of the hour on Friday to talk about 10Qs, 10Ks, all those 10-number documents and why we should pay attention to them. So deep inside baseball on Friday. But as I said, what can you learn? You can learn a lot from those documents about what people are doing and whether or not they are the kind of folks that you would want running your company. But as I said, that is a Friday at the bottom of the hour. We will talk about the maven of 10Qs and 10Ks and all the other 10 documents on Friday at the bottom of the hour. So make sure and sign into that. Other things going on in the world of trading.
Welcome to the City Careers Service. How can I help you today? The Goldman Sachs. I want to work for the Goldman Sachs. Give me a job at the Goldman Sachs. Why don't you try somewhere else like UBS? What is that? Is that the Goldman Sachs? No, it is a Swiss bank. It is similar to Goldman Sachs, but pays a bigger salary. I don't care. The hours are shorter. I don't care.
If you've missed it on YouTube, one of the biggest things is a meme that is over and over about Goldman Sachs. And they have like a cartoon kind of program that generates both speech and bears talking to each other. It is very interesting. But if you thought that the line of people in going to work for Goldman Sachs has diminished in any way because of them rigging LIBOR or maybe messing with interest rates or loans, it has not. 250,000 applications this year for summer job and graduates. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Anyway, I had a caller hang up, not hang up, but actually call, but didn't want to go on the air. It's not that he hung up. He just didn't want to go on the air on Friday or Thursday last week and wanted to know about what I thought about the British exit and how it would affect the markets, what we would know or what I thought. And I really hadn't spent a lot of time on it, although I spent, I don't know, maybe I was there 25, 30 times in the 90s. In Britain, we had an office in Surrey, which is south of London. Went over there a bunch of times. I figured out one thing that I knew when the debate came up for socialized medicine here in the United States, and that was I'd been into both the hospitals in Canada and the UK and figured it was not something for me. Everybody told me elsewise, but I'd spent enough time over there. I had many employees that answered to me. Some programmers over there. But I have to say that I haven't spent a lot of time in the last 10 years spending any time looking at Britain or going back. I traveled enough. I just want to stay home and go in my own bed for the most part, unless there's something really exciting to go do. Traveling the world, I've done that. Traveled 2 million miles in about 8 years. That was plenty. But after going through the pros and cons from the British exit, I can't believe one person in that country would want to stay in the EU. Whatever you've been heard about being a member of the EU and being a UK citizen, it is 10 times worse for you than you have heard. The only thing that amazes me is more people are not voting to get out. From almost the British government, at least the last few years, has sent about a little ton of money to the EU. They get about 75% of that back. So it's not like, you send $1, you get $1 back, or pound back. Basically, they are financing, along with the Germans, almost all of the third world countries that make up Europe. So a great deal of the cash leaves there. If you are a British citizen and you're any number of different businesses, they've been sent off to different countries to pay off rather different deals. If you are a fisherman in Britain, you will stand out on the shore and watch 2 miles out as most of the Norwegians and Danish are fishing. You are, by law, not allowed to go out there and fish. So if you were a fisherman, you're done. You can't do that anymore. And this is one of maybe 20 or 30 different things that happened as a citizen of the UK, where they just got rid of you. They made a deal with the devil, i.e. the EU, and it had gone away. But one of the other big arguments is for Britain is that if we don't participate, we won't have a say. Well, the downside of that is that Britain has appealed EU rulings 70 times. Guess how many times they won an appeal with the EU? That is 0. They have never once, out of 70 appeals, out of an EU verdict, and actually all these edicts are made by people that are unelected by anyone. They are much like the people here in the United States. It's a growing thing where we just have bureaucracies, and you have laws written as the secretary determines. Basically, that's a great deal of what's happening over there. People have been thrown out of their houses to make way for immigrants. Maybe build the immigrants a new house of their own. Nah, let's just throw you out and let you go see where you can go find a place to live. And the question is, why and how would anybody ever get reelected? The answer is they don't care. If you are a member of the UK Parliament now in the lower houses, basically you are getting such huge paybacks from the EU, you do not care. And of course, for the most part, you have no impact at all. Whatever you decide has to go through the EU. They nix it because you're in Britain, and that is it. This week, actually on Thursday, the largest people in the world, heads of Google, Shell, BP, Deutsche Bank, Goldman Sachs, will all be there determining the future. They are trying to get together to figure out how to keep the EU, Britain in the EU. Mostly what's been done so far is Mr. Cameron, the Prime Minister of the UK, has taken to outright lying about what will happen. He's predicting blood in the streets. Overstating your case is probably one of the easiest ways to lose an argument. But of course, they're saying that they will have a huge problem. The downside is that experience, and also the Swiss experience, is 180 degrees compared to it. The strongest country in Europe is Switzerland. They have the lowest taxes. They have a very tight immigration policy. And all I got to say is, after looking through all this stuff, reading it, watching some of the news, I don't know how anybody even says that this vote could actually even be close. There is very few, if any, people going to bat for the citizens of the country. They are all, as far as I can tell, selling out their countrymen as absolutely fast as they can. And whether it's large multinationals that are more than glad to have the kinds of new regulations that mean nobody short of a 100,000 person company could ever get into a business, are more than glad in supporting these things. And even the British government itself basically subsidizes all the particular political action committees that say that they want to have more regulation by the EU. So it's become this kind of almost retarded loop of the British government spending more money for people to tell you that's exactly what they want, but of course they're being paid by the exact same people that are selling them that people are asking us for it. So a horrible condition over there. We can hope that we avoid it here. But do not be surprised if the people actually ask to be out. The experience in Switzerland, like I said, who's not part of the EU, is the strongest, has the biggest GDP, has the lowest taxes, and the lowest crime of all of Europe. And it is almost unconscionable the way that the politicians for Britain treat their own citizens. You can check it out. But man, you don't hear a lot about it, mostly because I think that the government owns the news organization, the BBC, which is about 80% of what people watch over there. And they control the media for a great deal. But to me, a big warning for the United States that maybe we never get into that point of view where we can't throw out our politicians when they fail to actually do what we want them to do. A big warning signal. And of course, ironic that the guy that wrote 1984, An Animal Farm, came from that country. We will be back and look at charts after the hour.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. We're going to start looking at charts out here of stocks that are at least moving, which, you know, what are we, 0.6% up on the S&P. So not a huge move out here today. Volume continues to be incredibly light, 2.2 billion shares as we hit the bottom of the hour. So this is not a rousing endorsement where people are climbing in at any price to get in. There is a very light amount of volume. And my guess is that we continue to go higher until we see shorting stops. Somebody in the den said you still had the opportunity to cover before the end of the day. And I think that is kind of what we're looking at here. If you short in the morning, then you're covering in the afternoon. Those kind of feedback loops fit in. Markets can go a little bit higher than you'd ever think. My guess, though, is I'm looking for when these stocks are quit to be or to be shorted every day. And I will let you know when the warning signs come out. But continue to see stocks that are probably way heavily shorted for such light volume and narrow trading ranges. Normally, you don't want to be short big stocks out here without some volatility behind it. Right now we have decreasing volatility, and that may be because of Miss Yellen out there, who is always around the corner to start yakking the second the markets may look weak or may look strong. Either one she doesn't like. She wants the market to go up about 5 points on average or 4 points on average each day in the S&P. She'd be happy with that. That would be it. Carbo Ceramics is one of these companies that was a Kramer pump. I don't know if it was a pump and dump, but he got everybody in this thing back at the absolute highs, was talking about this thing going to astronomical levels even when it hit $156 out here on July 1st, 2014. Of course, crude started coming off, and almost a triple whammy. The Carbo Ceramics made little ceramic beads about the size of sand for fracking, but very much more expensive than sand, but it did a much better job. What someone finally figured out was a variety of things. One, that they could polish actual sand itself to act about 80% as good as the actual ceramics that Carbo Ceramics were making. The price of crude came down, and there were some restrictions in some places for actual fracking and using these things. A lot of people didn't care if you put sand in there. They were all kind of whacked out, though, about the ceramic product that Carbo Ceramic was putting in the earth. I don't think it actually amounted to anything, but of course, everybody's always insane about something. But one of the few stocks that actually has a little juice up here and off of the bottom. What's happened in this one? They had to issue a lot of shares of stock to gain some finance money. That has gone through, and a lot of people shorting this thing thinking that those additional shares would be sold fairly quickly. They did not. You want to look at this kind of pattern out here, because this is one that you traditionally do not want to be short. Doesn't mean you have to be long, but when you see what I call that Lazarus pattern, where you get these very tight trading ranges, this one was all over 1175 for an average for a week or so. It's not uncommon to see a little pop out here. Now the volume is only 844,000 shares today, so I'm not saying this is a dyed in the wool, but again, one of the reasons why in a quiet market, especially one that's not trending anywhere but going sideways, probably a good time to exit and take your cash. The idea that this company is going to zero anytime soon, maybe they got another year and a half now. And that is the problem with these companies, and always believing, unless the company is a complete and utter fraud, normally the spigot does not turn off 100% for whatever someone has, whether it's technology, whether it's ceramic beads for fracking. You do not have an end to it all. And eventually, even in the worst companies, you will have a short squeeze. And I think you got a little bit of that today. What else do we have? I had some other ones out here I wanted to look at. If you want, you can email me at path@tfnn.com. You can also email me Well, that's what you had to do. Email me at path@tfnn.com. But you can call me at 877-927-6648. There was a KRE is on my list of stuff. You got the regional banking index. This thing has been trying to push back up. We talked about these all gapping down on Friday, kind of coming back up here today. But what you do not have is any kind of volume. Today, 4.3 million shares. That little hanging man inverted candle from Friday at 8.4 million shares. So again, very light volume back in here for some of these bounces today, but that's the entire market. If you look at this on a bigger scale for the retracements, this has basically gone through its 618 retracement, which would have been just a couple pennies over $41. It's gotten to 42.03, but certainly you get these kind of spikes down, and almost always these things are on down days that you're finding a lot of people exit stage left. I think the thought was that interest rates would be going up, and it's that story is probably not as quick or as soon as everybody wanted. Probably why we got such a big dip Friday morning, but maybe it's not as bad as everybody thought either. We're going to look at a few of these ETFs out here that are making interesting highs or lows. The XLE, another new session high out here. Let's get out of this so we can see a little more. But again, you wanted to see a lot of volume in the energy sector. The last high is April 28th, 68.82, with 24 million shares. We're going back up into that candle today, 11.4 million shares. I don't think we're going to get that kind of volume. Does not mean that we could not test that 68.82 yet again. I think we could, but certainly we are not chasing any of these with a ton of energy. Let's go back and look at some of the ones that we looked at on Friday. Wanted to see how those actually did. In fact, when we talked on Friday, I said, maybe everybody's going to change the idea about what the interest rate hikes coming would actually change. And most of these charts do look, again, pretty much the same, but again, very light volume out here today. BBT, as we talked about on Friday and Thursday, up against this January 4th gap down that happened with a lot of volume, 5.9 million shares. Today, we're going into that with a 2.5 million shares so far. So again, very, very light volume. Probably a few people shorting before the top is in, and shorting in the morning, covering in the afternoon. When that is over, that will be the time to pull the trigger. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I want to look at some of these that are at least moving out here. FCX, another gap up today. Again, not huge volume. You're back in to a congestion line that goes back to the 6th of May through the 26th. So, John of Clearwater, I don't see a lot in this. You had the big down day with 31 plus million shares on the 26th. You're going into that candle today. Volume's going to be about the same out here. So you don't have a real clear signal. I would like to have seen a little bit more volume. Of course, the next step up is into this big down day that had 58 or 59 million shares back on May 3rd. And that's what you're going to be running into in FCX very soon. You need some juice out there. And right now, I don't see a great deal. Have a question in email, and it reads this way, but I'm going to answer this on the radio. It says, is there a way to search topics in the past issues of the report? He was thinking about virtual reality and companies that hold patents and could benefit from VR market and as the VR market expands. And I would say you're probably going down a road that I wouldn't spend a lot of time on. From Oracle losing their big patent lawsuit and copyright lawsuits last week, try to think of one of these patents in technology actually amounted to hill of beans. I can't remember when the last time one of these things just wasn't a way to actually dig into somebody's books or to depose them or embarrass them. The price of actually getting a patent is not that expensive. It's very expensive to actually protect. But once you get into the software and other areas of it, even the one from Samsung and Apple that they've been fighting for now 8 years, it's about $500 million. Apple's got $238 billion in cash. Doesn't even make the needle move. And for the most part, I can't see any of these companies, whether it's Facebook, Microsoft, that are in this thing for the patents or are going to make a big difference in the patents. For technology, patents are almost irrelevant anymore. My mother never had an elephant, but irrelevant. They just don't matter. I'm trying to remember the last time that they actually did. Every time someone wins, it gets appealed, it gets overthrown. The Oracle thing, they went twice at this thing, lost both times. It just isn't a big deal anymore in technology. especially in software. It's pretty non-existent. The Oracle lawsuit against Google for Android may be the last big software lawsuit ever filed. I think it might be. It's set enough precedent that it just doesn't matter. On hardware, a lot of people think you can just make people not build something because you've got the patent on it, or you can raise the price of the patent so high that it doesn't matter. And the answer is that just because you have a patent doesn't mean that other people can't build it. You have to offer them licensing fees, and it has to be reasonable. And guess what? There's going to be a judge telling you what's reasonable and what's not. So if you try to hold somebody up, what do? They just make it anyway and will fight you later in court, just like Samsung and or Android with Google. A lot of lawyers make money. It doesn't end up being a big percentage of the company's profits. And again, lawyers all have a lot of vacation property. But did it change anything? No, it did not. So I would say that you're probably barking up the wrong tree with that. You're looking for technology that can sell and sell with high margins, and I would probably focus on that opposed to anything else. Caterpillar, let's take a quick look at that one. I want to see how it came in. Well, another little tick up here today. We're kind of looking at volume. Did come in a little bit on Friday's close, so we'll have to see how they came in. It does come in today. But Caterpillar up again today. It's getting back into this candle of the 4th of May where the volume started expanding. 7 million shares in that one, 3.3 million shares today. So we keep getting into these candles that had 7, 8 million shares in these things, and we have very light volume now. Somebody asking about what the shorts look like in Caterpillar. So we will find out here. Yesterday, or actually on Friday, 18% of the trades initiated with a short position. 18% the day before, 14, 16, 13. So actually, you've had some fairly decent shorting up here, which makes me think that as long as they continue to short, can it go just a little higher? And I think the answer is kind of yes. We'll have to see what the numbers come in and look like tonight. But fairly heavy shorting for a Dow stock, which I don't like shorting to begin with. The reason why is that they're 95% institutionally held. So that means that you're shorting a Dow stock. You are basically playing with the last 5% of shares that are actually in some kind of real float. And one of the reasons why I don't short a lot of Dow stocks. I do play short squeezes on them, though, which is not uncommon. And again, where that huge institutional ownership becomes a big deal in companies like CAT. When we look on bigger data out here, the last time they reported days to cover was about 7 on Caterpillar. That is awful high. That's where I'm saying that 95% of those shares are on Caterpillar are probably locked up in funds and other things and people that are holding. I don't like, you need a company that has a lot of float that can move in and out. And normally Dow stocks are not the biggest of those, and why I shy away from actually doing those. But at the same reason, for a short squeeze, they can always go higher with just the last 5 or maybe 10% of shares that aren't locked up in all these funds actually coming in and out of the stock. So a little higher out here today. Again, no volume, but doesn't mean that it can't go up a few more days. Logically, you would maybe want to look at this gap that was on May 3rd. A lot of stocks out there have these high volume gap downs. This one wasn't that high. It was about 5 million shares that day. But my guess is that gap right around the $77 level is where Caterpillar will find some fairly significant resistance, and you're going to need volume to get through it. Was looking at Panera again on Friday also. Wanted to see what this one did. zoom in here just a little bit on this guy. What we got? And come on, Panera. Oh, there it is. We're going to break. When we come back, we'll look more at Panera. This one did get up there, light volume, did sell off in the morning, kind of come back out here a little bit before the end of the day, but not a lot. But we'll take a look as we do come back for the last segment. S&P up 12.5 points. Volume still very wimpy.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. Just as a kindly reminder, if you like this show, please tell 2 friends.
And he tells 2 friends, and she tells 2 friends, and so on, and so on, and so on.
Well, we can only hope, can't we? Anyway, make sure, tell them to catch this between 2 and 3 on most of TFNN.com. Anyway, Panera Bread, we were looking at this, a nice little dip down below 216 today. Recovered most of it, and, kind of into Friday's little dip out here. Volume not all that exciting. These stocks are continuing to kind of hold around these highs. But again, with the market kind of just drifting higher, I'm going to call it drifting because there isn't any volume behind this, 2.4 billion shares as we come in the last 5 minutes of the show. There just isn't a lot of juice on there. Had somebody bring up Apple in an email during the break also. And they didn't tell me where they were from, so Lutz, Florida, I assume. Another move back up with Apple. It did spike up to $100 today. Volume on it so far is about 18 million shares. Going into this last high that was $100.73, you had 56 million shares. So you kind of went up. You had a little bit of a pullback. You're kind of moving back up. But again, Apple does see that gap from the 27th of April when it came down on 115 million shares as probably a place where a lot of people are hoping to get their cash back in Apple. And for a while, I suspect that is going to be fairly stiff resistance. That day was May 26th. But yeah, 38 million shares the day before, 56 million shares that day on the 26th. And as you get back up into those days, 115 million shares back on that 27th of April is the line in the sand where those that are hoping to get their cash back would get back in. And of course, that gap goes all the way to 105. There is also a double gap in here that goes back even farther than that, but that would take you to about 103. And I suspect what we're looking at here now is that 103 area would be most likely where you would find the price either breaking out or breaking down. So you may have just a little bit more out there in this if the market can continually do this kind of 5 or 10 point higher. But man, the volume is light, so I would not be making that play. I would look to see on either a pullback on even lighter volume or some kind of topping signal in Apple. And do we have time for Microsoft? I have one more email for that MSFT. We'll take a look at this. As we said, this thing was coming back into its gap. It did that one with 37 million shares, and you needed 127 million shares from the 22nd. So now you're probably in this lower trading range. Could you get back up to 53.5, 54? If I was going to short it, I would have to wait for 54, 54.25. But still, one of the stronger companies out here. I can't see this as a big money maker going short. They continue to do just about everything right. The market may not be with them. Technology and PCs may not be right with them, but they probably have probably the best CEO in technology now, or the second best CEO in technology. It'd be very tough to figure out what Meg Whitman would have done with this company, but she's probably the second best of a bad company over at HP, but doing all the right things also. Anyway, see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. See you later. Hang on for Tom O'Brien for the next 2 hours on most of TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.